Mic test. So, good evening, students. Welcome to another session of 2026 A-Level Rapid Revision. Okay. So, just like around 30 days are remaining for the exam. Okay. And we have finished the company accounts in the last session. Okay. And we did three past papers, I guess, 2024, 2023, and 2025. Okay, so today we are going to start the cash flow statements. Okay, so actually this cash flow statements, the statement is a financial statement. Okay, so there are five financial statements, as you know. First one is profit and loss statement, financial position, changes in equity, cash flow statement, and accounting notes and disclosures. So those will be the financial statements. Okay, so after doing the P&L, changes in equity, and SOFP, financial position, okay, the cash flow statements are made by the organization. Okay, so that's the normal accounting procedure. Okay, so yes, so after doing the company accounts, now we are going to the cash flow statements. Basically, these cash flow statements must be tested in the A-level exam. Okay, so it consists minimum 20 marks. Okay, minimum 20 marks for the out of 100, that will be 5. Okay, so much needed question is that I will explain this cash flow statement in a very brief manner. Okay, so what are the actual things there, and I will do the couple of past papers. I think I'm hoping to do the 2023 and 2022 past papers. Okay, so I am hoping to finish the whole cash flow statement within today. Okay, since the 30 days are remaining for the exam, we have some things to study, which has management accounting stuff and the accounting ratios. Okay, so yes, we'll move to the cash flow statement. The cash flow statement. Okay, so actually in the cash flow statement we can categorize the business activities as three. Okay, first one is operating activities. Second one is investment activities. Next is finance activities. Okay, so those three will be the day-to-day activities which we can categorize into three in the cash flow statement. Okay, so what is meant by these operating activities? Actually, this operating activities is the businesses day-to-day activities. Day-to-day activities, which means sales, purchases, general operating expenses such as discounts, salaries, payment. So those stuff will be the businesses, companies' day-to-day activities. So those activities categorized as operating activities. Those cash flow activities categorized as operating activities. Investment activities, a business investing money to another business. This is business A, this is business B. They are investing money, investment activities. Okay, so those stuff is known as investment activities. So those cash flows are known as investment activities, and the finance activities will be company is trying to collect money. This is company A, this is company C. The particular company is trying to collect money, so that is known as finance activities. Okay, so just so that will be the basic stuff for the for examples for the finance activities are which can be known as the share issues, the bank loan and the bank loan repayment. So those stuff will be the finance activities, collecting money and paying the money. Okay, mostly the shares and the loan stuff will be the financial activities. Finance activities, investments activities, for an example we can own as investing in treasury bills, treasury bonds, investing in some other investment assets. So those kind of transaction is known as investment activities. So that's the basic stuff. If you know which is investment, which is finance, which transaction is the operating activity transaction, so cash flow statement will be the easiest statement for you. Okay, if you know the basic nutshell, that is the basic nutshell. If you know that nutshell, this is the easiest question for you. Okay, next thing, based on the operating activities, we can categorize the cash flow statement methods as direct and indirect. We can categorize the cash flow statement methods as direct and indirect. Okay, only the operating activity method is different for direct and indirect, but the investments and the finance activities, those formats will be the same. Okay, so this is the basic, very basic introduction that I can give for the cash flow statements. Other than that, the cash flow statement is nothing a big issue. Okay, so yes, so the direct and indirect, I think the direct method has been tested on 2022 paper. On 2020 A level, the direct method has been tested. For the indirect method, I guess in 2023 paper, the indirect method has been tested. Okay, so yes. So today we look at the direct method first, and after that we'll go to indirect method. Okay, so yes, I think that's pretty much enough, Putha, because since you have 30 days more to the exam, I don't want to stress you by giving the all theoretical notes. Okay, so when I'm doing the calculation, the questions, I will explain a pinch of theories, okay, which you needed in your exam. Okay, that will be pretty much enough, because this is rapid revision, so my focus is to teach you only the exam focused content. Okay, no one can teach you within the 30 days, no one can teach you the basic stuff, the full and full, the basic, the basement stuff no one can teach, right? And it is unnecessary. In this 30 days, what you have to do is you have to study only the exam focused stuff. So that's how you can efficiently manage your time. Okay, so the exam will be the August 25th, the part 1 exam. So yes, we'll start with the 2022 paper. Okay, so I will give you 5 minutes, just read down the 2022 paper, and after that I will show you how to do that 2022 A level cash flow statements. Okay, so I think the 2022 A level, the question is question number 6A is the question, 20 marks question. They are asking to do the cash flow statement. Okay, please read it down and I will show you how to do that question. So this will be the format for the direct method. OA means operating activities. Okay, so we'll start with the question. The following information has been extracted from published statements of the financial position of Lahiru PLC as at 31st March 2022 and 31st March 2021. Okay. Property, plant and equipment, carrying amount given, cash and cash equivalent is given, stated capital, revaluation reserves, long-term bank loan, income tax payable, okay, all given. First, the additional information, okay. During the year ended 31st March 2022, cash collected from the customers was 245,000, sorry, uh, 245 million, and cash paid to the suppliers and the employees was 235 million. Okay. So the cash receipts is given. Cash receipts 245 million and cash payment, okay, and the cash payment and the employees, okay, both together. These two given 235 million. Okay, three zeros. So, yes, after that, we can calculate the net cash generated from the operating activities, which is 10 million. Okay. Second, depreciation and the income tax expenses for the year ended 31st March 2022 were 35,000 and 15,000. Okay. Why they are mentioning about the depreciation and the income tax payable? Okay, we don't know. If you don't know, no worries. Go for the next adjustment. Okay, and then find it out why they have given this adjustment. Okay. Okay, next adjustment, adjustment number 3. During the year ended 31st March 2022, the company paid a bank loan installment of 35,000, which includes the interest 8,500. Okay. Further, the new bank loan was obtained on 31st March 2022. Okay. The one thing we can get is the bank loan interest payment. So the bank loan interest payment was 8,500. It is given. So yes, interest paid 8,500 we can calculate. Okay, it's done. It's given. And they have paid a bank loan installment of 35,000 and which include 8,500 interest. Okay, so if there's a bank loan repayment which we need to include in the finance activities, okay, so bank loan repayment 35,000 is the installment. Okay, from that installment we have to reduce the 8,500 because the interest is already entered here. Okay, so we don't have to enter that interest same number again in the finance activities. Okay, so 35,000 minus 8,500, which is equals to 26,500. Okay, 26,500, which is a cash outflow. Okay, the cash outflows are needs to be minus, inflows are needs to be plus. Okay, so that's the basic. Yes. And further a new bank loan was obtained. Okay, so the new bank loan was obtained. Okay, if you have obtained a new bank loan, that needs to be included in the finance activities, and we don't know the number. So how to get that number? Working number 1. Okay, working number 1, bank loan. Okay, the balances are given for the bank loan. Okay, the opening balance was 125,000. Okay, balance board forward given 125,000 was the opening balance. Okay, and from the opening balance we have paid, right? Paid this amount. We have paid this amount because don't confuse, this 125,000 does not contains the interest. Okay, so when we are repaying, when we are reducing, we have to exclude that interest payment also, because the bank loan installments have the loan amount and interest. Okay, so from that we have to reduce the interest and get the numbers. Okay, so yes, the 26,500 was paid. Okay, and the closing balance is how much? The closing balance is 135,000 is given. So this gap is new loan. This gap is new loan. How to get that number? 135,000 plus 26,500 and minus 125,000, that will be the new loan. Okay, so how to calculate that? 135,000, you have to add 26,500 and you have to minus 125,000. Okay, so 36,500 will be the new loan. Okay, from this number you have to add this and minus this. Why did I add 26,500 and minus 125,000? It's a basic maths. From you are going to downwards to upwards, you have to do the reversal calculation. Upward and downwards, same as it is, you can do, but downwards to upwards, you have to reverse it. So that's why, in order to get this number, I have add this and reduce this. Okay, so if you calculate it from the upward and downward, 125,000 minus 26 and plus 36, you will end up by having this number. Okay, simple as that. So the new loan will be 36,500. So this will be our new loan. Okay, simple. Next, okay. The increase in the revaluation reserve represents the surplus arising from the revaluation of land and buildings on 31st March 2022 for the second time. Okay. So, yes. So, how much is that revaluation surplus? Look at the balances. Revaluation reserve lands and the buildings. Opening balance was 8,000, closing balance was 13,500. Just there's a 5,500 increase. So, do we have to enter this 5,500 in the cash flow statements? No, right? Because in the cash flow statements, please remember, we have to enter the cash incoming and outgoing transactions only. The revaluation reserves and the discounts, the depreciation, we can't enter those stuff in the cash flow statement because those are non-cash added transactions. Okay, even we put a value for that transaction, that doesn't mean that that transaction has went as a cash or not. Okay, so remember, in the cash flow statement we can only adjust the transaction which actually went on cash or received on cash. Simple as that. Okay, so this revaluation reserve, we don't have to adjust this revaluation reserve. Okay, but they have mentioned it. So why did they mention it? We don't know, right? Okay, if we don't know, no worries, go to another adjustment and see how can tackle this transaction. Okay, next transaction. A loss of 2,500 was incurred by selling the machine on 31st March 2022. Okay. This machine was purchased on 1st for 2020 for 20 million and it was depreciated at 10% per annum on straight line method. Okay. So they are telling there was a loss by selling the machine. Okay. So if we are selling a machine, what we can actually have is the cash. We are giving the machine and taking the cash, right? So sold of a machine, sale of a machine needs to be categorized under the investment activities. Okay, so how much did we sold? We don't know. So we have to calculate. Okay, the numbers are given, we have to calculate. So working number 2, sale of property, plant and equipment. This is our working number 2. Okay, so they are telling the loss is 200 and sorry 2500. Okay, and sold the machine on 31st March 2022 and bought that machine on 1st April 2020, which means they have used that machine for 2 years. 2020 to 2022, 2 years they have completely used that. Okay, and depreciated at 10 percentage. Okay, and they bought for how much? 20,000. Okay, so that's what they are saying. Okay, yes. So the cost is 20,000, annual depreciation is 10 percentage, which means per year depreciation 20,000 multiplied by 10 percentage, which means 2,000. Okay, so 2,000 is the per year depreciation. Okay, so we have to get the carrying amount, which is equals to cost plus, sorry, cost minus accumulated depreciation. Okay, we know the cost is 20,000 and we don't know the accumulated depreciation. So how to get that accumulated depreciation? This is 1 year, no? 1 year depreciation ne? We have used 2 years ne? 2,000 multiplied by 2, 4,000 is our accumulated depreciation. Okay, because accumulated depreciation is what? The the addition of all the depreciation. This, what is meant by this accumulated depreciation, and all stuff are discussed under the LKA 16 property, plant and equipment. I have clearly explained in a crystal clear manner what is meant by this depreciation, the depreciation methods, what is meant by this accumulated depreciation, what is meant by the cost, what is meant by the carrying amount. All the stuff have been discussed under the LKA 16 property, plant and equipment. Okay, so per year depreciation is 2,000. So the accumulated depreciation will be 4,000 because we have used that particular asset for 2 years. So the accumulated depreciation is 4,000. Then the carrying amount will be 16,000. Okay. So how to calculate the loss here? Okay. Loss is equals to carrying amount will be more than the sold amount. Simple, right? Simple, right? If the carrying amount is more, the selling amount is less, that will be, on that occasion will only, you will get the loss. If the carrying amount is less, the selling amount is high, you will get a gain, right? You will get a gain. So the loss is 2,500 and we know the carrying amount, which is 16,000. Okay, so what will be the actual selling amount? 16,000. We don't know the selling amount. How to calculate the selling amount? Selling amount is equals to 16,000 minus 2,500. I think it's 13,500, right? Yes, 13,500. So the 13,500 will be our selling amount. So sale of PPE, which is 13,500, it's plus, right? Because we are getting the money. It's plus. Okay. So yes, this will be the workings for sale of PPE. Okay. And after that, Yes. The company purchased a motor vehicle. The adjustment number 6. The company purchased a motor vehicle on 31st March 2022 on for cash. So yes, at the end of the year, at the end of the financial year, they have purchased a motor vehicle, and yet the amount is not given. So we have to find that amount and we have to put that amount in the investment activities. So how we can do that? That's the working. That's why the depreciation and the revaluations have been given. Okay. So the easiest way to do is, okay, the working number 3, purchase of property, plant and equipment. The easiest way to do is look at the balances for property, plant and equipment. Look at the balance. Okay. So the opening balances is 245,000. Okay. 245,000 is our opening balance for the property, plant and equipment. Okay. And after that, we have sold the property, plant and equipment, right? So the 13,500 is our selling value, not the carrying amount. Okay. See, the balances are given in the carrying amount. If the balances are given in the carrying amount, we have to use the carrying amount only. So we have sold that particular asset for 13,500. So that doesn't mean we have to reduce 13,500. We have to reduce 16,000 because this 16,000 is our carrying amount. So we have sold an asset. So we have to minus it 16,000 because selling an asset will reduce the value for PPE. You know that because these have been tested and we have did these things in when we are doing the property, plant and equipment, the statement of property, plant and equipment, right? In the LKA 16 in the company accounts, when we are doing the statement of property, plant and equipment, we have discussed and we did all the adjustments there. Okay. When we are removing a particular asset, what we have to do, when we are revaluing a particular asset, what we have to do, what are the adjustments, what are the double entries, what are the entries, those things have been discussed when you are doing the statement of property, plant and equipment. Okay, so this will be just a refresh only. Yes, when we are sold an asset, we have to minus, we have to reduce the carrying amount, and now another thing we have to reduce is depreciation. The depreciation expenses is given, the depreciation is 35,000. Yes. And we have to add one more, which is revaluation. You know, the revaluation might increase the value of the property, plant and equipment. The revaluation surplus is there, 5,500. If you look at the balances, you can easily identify. After all these adjustments, we can have the closing balance, which is how much? 275,000. So that will be our closing balance for the property, plant and equipment. Now we have to find the purchase. Purchase is the thing we have to find. So how we can find that? Same as this way. Okay. So on 275,000, we have to minus 5,500 and 245,000 and add 16,000 and add 35,000. So our purchase will be 75,500, which is our purchase. So purchase of property, plant and equipment 75,500, which is minus because we are paying, right? We are paying, so that will be the cash outflow. Okay. The adjustment number 7, the company capitalized 10,000 retained earnings on 1st 2021. Further, the company made a public share issue on 1st 2022 and collected cash during the month of January and for all the shares issued. Okay. So the interim dividend 220,000 was paid on ordinary shares during the year. Okay. So what will be these adjustments? These adjustments coming under the finance activities. Okay. So if you have a adjustments like that, what we have to do is just put a changes in equity, the statement of changes in equity. Okay. They are mentioning two things, stated capital and retained earnings. Statement of changes in equity. Look at there. The company capitalized 10,000 retained earnings on 1st 2021. Okay. Capitalizing 10,000 retained earnings. So if the company capitalized 10,000 retained earnings, this will be the entry, right? You know that. Okay. And after that, the company made a public share issue on 1st 2022. Okay. Share issue. And they haven't mentioned the amount. Okay. So how to calculate that? Okay. The stated capital balances are given. Opening balance is 200,000. Okay. And the closing balance is for the stated capital is 285,000. And no other transaction has been made in the respect of the stated capital. So 210,000 is reserve capitalization. Closing balance is 285,000. So how to do that? 285,000 minus 10,000 minus 200,000, which is equals to 75,000 is our share issue. Okay, the share issues needs to be included in here. Plus 75,000. Why plus value? Because we are issuing the share and getting the money. Share issue plus 75,000. Also the retained earnings. Okay. So yes, for the retained earnings, they haven't mentioned the retained earnings stuff. Okay. So no need to worry about that. The retained earnings, the balances haven't been mentioned in the balances. Okay. So the retained earning balances have not been mentioned. So we don't have to worry about the retained earnings. Okay. So the adjustment number 8, they have mentioned that an interim dividend of 2,200 was paid to the ordinary shareholders during the year ended 31st March 2022. Okay. So the dividends paid 2,200. We are paying the dividend by cash, so we have to enter the dividend payments under the finance activities. So you can see under the finance activities, we can get the loan repayment, the new loans, the share issues, the dividend payments, all the things can be categorized under the finance activities. Mostly the investment activities in the sale of PPC and the purchase of PPC, those things are included in the investment activities. And the operating activities will be included in these stuff. All the things have done. Only one thing is left, that is this income tax. Okay. So how to get this number of income tax? I will show here. Working number 5, income tax. Okay. So the income tax expenses have been given. Look at the income tax expenses. Income tax expenses is 15,000. Okay. Expenses is 15,000. What we have to do, we need the cash payment. Okay. In the cash payment, if we add the closing accrual and minus opening accrual, you will get the actual expenses for the year. So okay. So, I think in the mm, last month, okay, when we are doing the statements of the sole proprietorship, I have clearly discussed, okay, why we are adding the closing accruals and reducing the opening accruals, okay. So, if the cash paid is given and we have to calculate the expenses for the month, okay, or expenses for the year, or else we can say the payment is given and we have to calculate the expenses for the financial statements, expenses for the P&L. Okay, so how to convert the payment to the P&L? What we can do is from the payment we have to add the closing accruals, which means payments plus the closing accruals. Closing accruals means the accruals we have to pay and minus the opening accruals. Okay, so in this formula you will end up by getting the expenses for the year. Okay, so the expenses for the year is given. The tax expenses for the year is 15,000 that has been mentioned in the exam paper. And now what we have to do is, now what we have to get the income tax paid. Okay, this interest and the income tax are paid amounts, paid amount, not the income tax expenses or the interest expenses. That's different, right? The income tax expenses, then the interest expenses are the different concept. Income tax expenses and the interest expenses are the year-ended expenses. For the year expenses are mentioned as expenses, income tax expenses and the interest expenses. These stuffs are interest paid and income tax paid. So for your clarification, I will write. For your clarification, I will write interest paid and income tax paid. Okay. Payments and the expenses are different. Even you still haven't got the perfect understanding, I can again give you a simple example. Okay. Imagine you got an electricity bill for a month around 5,000. Okay. You got an electricity bill for a month around 5,000. What you can do is you can pay either 5,000 or else 4,000. However, you have to pay, right? So imagine you have paid 4,000 since you don't have that much of money, you paid only 4,000. So, in a nutshell, what you can tell is the electricity expenses for the month is 5,000, but the electricity expenses you paid is 4,000. Okay, the accruals, which means the payables is 1,000. So, how to convert the paid amount to the monthly expense? Paid amount plus accruals, which is equals to the monthly expenses. Same simple concept as this. The annual expenses have been given. What we need is the actual paid amount. Okay, so write down this equation: paid amount plus closing accruals minus opening accruals, which is equals to the annual expense. Okay, so the opening accruals and the closing accruals have been given. Look at the opening accruals. The income tax opening accruals is 7,250. Closing accruals is 6,500. So how to get the cash paid? 15,000 plus 7,250 minus 6,500. 15,750 is the income tax paid amount. 15,750. Okay. So yes, now we can conclude the cash flow statement. Okay. So 8,500 plus 15,750, which is equals to 24,250 minus, okay, which means 14,250 minus is the net cash outflow from the operating activities. You have to mention these sentences, net cash outflow from the operating activities, because the marks have been allocated for these sentences. You will get 1 mark, right? You will get 1 mark for the net cash outflow for the operating activities. Imagine this, you don't know how to do the cash flow statements, but you have did the format, uh, you put the format and you write the net cash outflow from the operating activities, the net cash outflow from the investment activities, and the net cash outflow from the finance activities. You will get 3 marks. Okay. So every sentence in the cash flow statement is very much important. The marks allocation has been spread into the numbers as well as the letters also. Okay. So yes. So here this will be 62,000. Okay, 62,000 minus net cash flow of investment activities. For this, $82,800 net cash flow from finance activities. Okay. After including this, and this, after summation of this, you will get 6,550. 6,550 as net cash increase. Okay, net cash increase. And after that, go to the opening cash balance. 1,500 is given in the exam paper. The closing cash balance will be 8,050. Okay. So as you can see in the exam paper is also, in the exam paper, the closing cash balance I have mentioned as 8,050. So simple as that. So this will be the cash flow statement in the direct method. Okay. I know it might be a bit complex thing. Okay. But if you have the correct knowledge, okay, if you have the correct knowledge, that will be easy. Actually, this cash flow statement, it is a complex thing if you don't know the actual theory, actual basics. Okay. So for this, you need a understanding of the property, plant and equipment. Okay. So what is the carrying amount, how to calculate the accumulated depreciation, so what is the difference between the carrying amount and the net gain or loss. So if you have the correct knowledge about those stuff, it will be easy. So that's why I have explained the LKAS 16 not with the company accounts, with a separate section, with separately. Okay. So you will understand the crystal clear format of the LKS 16 and the advantages, disadvantages, the methods and the all stuff. Okay. So and this, the tax calculation, these calculations and these basic theory is included in the, when we are doing the financial statement in the sole proprietorship, all these things, all these theories have been discussed in there. Okay. See, every unit is interconnected in the accounting. Okay. So you can't skip any unit. Any unit you can't skip, right? So this will be a separate working. Don't confuse. This will be a separate working, right? Yes. These are the separate workings. So I will give you around 10 minutes. Write down the cash flow statement. Not only the cash flow statement, you have to mention the workings also. The workings also the very much important point. You will be allocated around 10 marks to the workings and the 10 marks to the cash flow statement. You will be get 1 marks for this statement, which means that this word, this sentence, 1 marks for this sentence and 1 marks for this sentence. Very much needed, very much important. Okay, you have to write the whole sentence, right? Not like OA. You have to write the full sentences of net cash flow of operating activities. You have to write it in a fully format. Okay, so yes, that will be the scenario, that will be the end of the direct method. Okay, so write it down, write the workings, write the notes, and after that we can move to the 2023 paper, 2023 A level accounts, which is in a indirect method. Okay, so yes, I will give you 10 minutes, note it down, and we'll do, after that we'll do the 2023 paper. We can conclude the session. So yes, students, we have to do this 2023 A level at indirect method. Okay. Question number 6A. The summarized cash account of Nimali PLC for the year ended 31st March 2023 is given below. The cash account is given, additional information is given, and they are asking to do the cash flow statement with the indirect method. Okay, so we'll do that without further delay. So we'll start with additional information. The profit after tax for the year ended 31st March 2023 was 4,550. Okay. So what we need is profit before tax. The profit after tax is given. So how to calculate the profit before tax? Simple method. Okay. So you know profit before tax minus income tax is equals profit after tax. Okay. So the profit after tax is given. The profit after tax is how much? 4,550. Okay. 4,550. I'll do with blue color. 4,550. Now what we need is profit before tax. But if you look at the cash flow statement, the cash statement, okay, the cash account. In the cash account, the income tax paid is given how much? 900. So income tax paid 900 is already given. Income tax paid in the cash account, it has been given. So what we have to do is we have to get the income tax expenses for the year. So how to get the income tax expenses? In the last example we have discussed, paid amount is 900. With that we have to adjust the income tax payables. So we have to add closing accruals. We have to minus opening accruals. Okay, the closing accruals is given for the income tax payable. The closing accrual is 600. The opening accruals is 350. Okay, so closing accruals 600, opening accruals is 350. So if we adjust that, 900 plus 600 minus 350, which is equals 1,150 is our income tax expenses. So 1,150 our income tax expenses. So 1,150 plus 1,150 plus 4,550, which is equals 5,700 is our profit before tax. 5,700 is our profit before tax. Simple as that. Okay, very much simple. What you need is a basic knowledge about the theory. If you have the basic knowledge about the theory, about the company accounts, about the property, plant and equipment, all stuff, so this will be the very much easy in order to calculate. Okay, so yes, next is the credit sales for the year ended 31st March 2023 were equal to the 2 times of the cash sales. Okay, so why we are need the credit sales here? Okay, so yes. Okay, so why we are need credit sales here? Why? Because in the changes in the net asset, we have to identify what? We have to identify what? The increase or decrease in the trade receivables. Okay, so in the changes in the net assets, we have to calculate the change in inventory, the change in trade receivables, and the change in trade payables. Okay, so in order to get the change in trade receivables, what we need is we have to get the actual trade receivable amount. Look at the balance here. The opening balances for the trade receivable is given, but the closing balance is a question mark. So we have to find the closing balance. So how to find the closing balance is simple, very much simple. Do a TR account, get a TR account, trade receivables account. In the trade receivables account, just input the data you have. You have the opening balance for the trade receivables 1650. Trade receivables is a debit balance. Okay, and after that, what you need is the closing balance for the trade receivables. Okay, and the credit sales in the adjustments, look, the credit sales for the year ended were equal 2 times of the cash sales. Okay, cash sales is 3500, so the credit sales will be 7000. What will be the double entry for the credit sales? Sales account credit and TR account debit. So this will be the credit sale. Okay, so this is balance board forward. This will be the sale, and if there is a sale, there must be a cash paid to the trade receivables as well. Sorry, cash received by the trade receivables as well. Yes, the cash received is also there, 4750. Look at the cash account. The cash account, the trade debtors, 4750 is there. 4750 is there for the cash. Okay, so if you sum it up this, you will get ended up in a trade receivables closing balance. So 3900 will be our balances for the trade receivables, the closing balance. See, the opening balance 8650, 8650, 8650 minus cash, yes, 3900. So opening balance is 1650, closing balance is 3900. So what will be the golden rule? If the golden rule is, if asset increase, if asset increase, okay, cash decrease. If liability increase, cash increase. So this is the golden rule. Please write it, this golden rule. This is the golden rule for the changes in equity. Okay. So the closing balance is 3900, the opening balance is 1650. So what will be the change? What will be the change in the trade receivables? 3900 minus 1650, 2250. Because the closing balance is 3900, the opening balance is 1650, the change is 2250, right? So since the closing balance is more than the opening balance, asset increase, cash decrease. So cash decrease 2250, cash decrease. Go to the next adjustment. Credit purchases for the year ended 31st March 2023 were 3000. Okay. So same theory. What we have to do is just put a trade payable account. Trade payable account. The opening balances for the trade payable is not given, but the closing balances have been given. It is 3000. Okay, so the opening balances is not given, but the closing balances have been given, which is 3000. Okay. So the purchases have been given. The purchases is how much? 3000. So purchase account debit, trade payables account credit. So purchases is 3000. If there's a purchase, we'll have the cash also. Cash account credit, trade payables account debit. So go to the cash account credit. Yes, the trade creditors are there 5,000. So 8,000, 8,000. Again, 5,000 will be the opening balance. Okay, 5,000 will be the opening balance. So opening balance 5,000, closing balance 3,000. Okay. So yes, opening balance 5,000, closing balance 3,000, which means the change is minus 2,000. Reducing, right? The liability is reducing. If the liability increase, cash increase. If the liability is decrease, see, if the liability increase, cash increase. If the liability decrease, the cash is also decrease. So change in trade payables 2,000 minus 2,000 minus. Okay, so after that we can move to the next point. The carrying amount of the motor vehicle disposal is 3,500. Okay, so yes, the carrying amount for the motor vehicle disposal is there. So why they have mentioned it? Because the motor vehicle have been sold and we don't know the exact amount. Okay, but the exact amount can be identified in the cash account. See, in the cash account for the debit side, disposal of the motor vehicle is there 5,800. Yes. So in the investment activities, sales of PPE, we can add 5,800. Simple as that. And we have to know the purchase. Okay. So simple as that. The purchase is also given. The purchase is also given in the cash account, so no worries on that. But we can identify the profit. Gain on PPE. We can simply identify the gain on PPE because the selling amount is 5,800. The carrying amount is 3,500. So the gain will be 2,300. The gain needs to be adjusted here. 2,300 minus PPE sale gain. Why we have to adjust is in the indirect method, in the profit before tax, we have to adjust non-operating expenses and income. So actually what is meant by this non-operating expenses and income? Non-operating expenses means even the business operates or not, company have to bear some expenses. So that is meant by non-operating expenses. For an example, the depreciation, the interest expenses, those are non-operating expenses. What is meant by this non-operating income? Even though business activate, runs or not, business can earn some income, which means the share income. If the business have invested some money from outside the company, the income, okay, the share income, like this, the PPE sale gain. So those are non-operating income. So in the adjustments, we have to adjust the non-operating incomes and the non-operating expenses. Okay, simple as that. So we have identified the non-operating income as first in the adjustment. Now we'll go to the cash account. Okay, the cash balances is there. The opening cash balance is there. How much? 650. Yes, the opening cash balance is there, 650, and the closing cash balance is also there, 250. So ultimately the change will be 400 minus. Okay, so if you have the opening and the closing cash balances, you can easily identify the net change in the cash flow. Okay, so yes, that thing have been identified. The sales are there, the cash sales. There are no thing for the cash sales. Okay, the bank loan is there. Okay, the new bank loan. We got a new bank loan. 8,500. We got a new bank loan. And share issues are there. Share issues given 4,000 in the cash account. You can easily see. Disposal of the motor vehicle. Yes. The purchases we have included. Okay. No need to adjust in the purchases. The trade creditors. Yes. The operating expenses. Yes. No need to add the operating expenses. And bank loan repayment and interest. Yes. Bank loan repayment. So in the bank loan repayment is 3,450, but actually in the 3,450 we have to exclude the interest. So I will show you how to exclude that interest. Okay. So sorry, the bank loan repayment needs to be here. My mistake. Okay, I will show you how to get the bank loan repayment and the office equipment purchase. How much? Office equipment purchase 13,500 is given. Okay. Income tax paid 900 given, and the balances is given. Okay. So I will show you how to get the bank loan repayment. Okay. And now go to the property, plant and equipment carrying amount. Property, plant and equipment carrying amount. So I told you in the adjustments we have to adjust the non-operating income and expenses, right? So first non-operating income is sales in the PPE, and we can adjust another non-operating expense which is depreciation. Depreciation is another non-operating expense. So how we can identify the depreciation expenses? I will erase this and show how to get that depreciation expenses. So, okay, so how to get the depreciation expenses? Opening balance is given 16,750. Okay, and after that we know there has been a purchase of 13,500 office equipment, and there has been a sale of PPE. The carrying amount for the sale is 3,500 is given. Okay, so they haven't mentioned any revaluation reserve, so the revaluation increase or decrease, so that's fine. So the closing balance will be ultimately 25,950. Okay, so the gap is depreciation. How to calculate the depreciation? 25,950 plus this minus this. Okay, plus 3,500 minus 16,750 minus 13,500. So 800 will be the depreciation expenses. 800 will be the depreciation expenses. Okay, so the depreciation expenses has been calculated, Okay, and the inventory changes in equity. So look at the changes. The opening balance of the inventory is 2,200. The closing balance is 2,500. See, if the asset increase, see, the opening balance is 1,200, closing balance is 2,500. Means if the asset is increased by 1,300, so assets increased by 1,300, cash decreased by 1,300. Change in inventory, 1,300 assets increased, so cash decreased. Assets increase, cash decrease, liability increase, cash increase. So that will be the golden rule. Okay. Next, trade receivables done, cash and cash equivalent. It's also mentioned, trade payables mentioned, accrued bank loan interest. Accrued bank loan interest. Okay. So the accrued bank loan interest have been given 200 and 150. Yes. And the loan repayment is there, 3,450. So how to calculate the exact loan repayment? Okay, simple as that. Loan repayment. Okay, so the balances of the bank loan have been given. Okay, the opening balance of the bank loan is 10,000. Okay, and the new loan, is how much? 8,500. And we have paid the loan, right? And that's what we want. And the closing balance for the bank loan is 15,500. So what will be this amount? 15,500 minus 10,000 minus 8,500 is 3,000. So 3,000 is our bank loan payment. 3,000 is our bank loan payment. So if 3,000 is the bank loan payment, interest will be 450. So the interest expenses will be 450. This is interest expense, right? This is interest expense. So if the interest expense is 450, so how much is the interest paid? Interest paid. So that's where the accrual thing is come. Interest expenses is 450. Okay. We have to get the paid. Closing accruals minus opening accruals. Okay. So the bank loan interest opening accrual is 150, closing accrual is 200. 200, 150. Okay. The 450 plus 150 minus 200. Which means 400 is our paid amount. Interest paid 400. Okay, simple as that. Just income tax payable is done, accrued bank interest is done, and the total equity has been given. The total equity is simple as that. In the equity, they haven't mentioned any changes in equity and all stuff. and those stuff have been not mentioned. Okay, so yes, okay, so simple as that. And what we can now do is we can adjust these amounts. Okay, so 5,700, so 2,300 minus 2,300 plus 1,250, 1,050 will be the amount. Okay, is so this will be 4,700, and after that 1,300 plus 2,250 plus 2,000, which is equals to 5,550. Yes, 8,850 will be our net cash flow from operating activities, minus 850 minus 850 plus 900 plus 450, 2,200 is our net cash flow. Okay, our investment activities will be 7,700 minus, and our finance activities will be 9,500 plus. Okay, so after the summation you will get the 400 of net cash flow. Okay, so this is minus 2,200 minus 2,200 and minus 7,700 plus 9,500 is equals to minus 400. Okay, so simple as that. Okay, so yes, that will be the cash flow statement in the indirect method. Okay, in the indirect method. Okay, so we did 2023 paper as well. Okay, so the main differences is the operating activities only, the finance activities and the investment activities are same. In the operating activities, you have to calculate the profit before tax. On the profit before tax, you have to adjust the non-operating income and the non-operating expenses. After adjusting the non-operating income and the non-operating expenses, you have to adjust the changes in the net assets. For in order to do the changes in the net asset, you have to get the net asset increase and the net asset decrease. Okay, so yes, after doing that, the same procedure will follow: income tax paid, interest paid, and you will get the net cash flow. And investment activities, finance activities, you will ended up by getting the net cash flow and the opening and the closing cash and cash equivalent. So simple as that. Okay, so that will be the end of the cash flow statement. Okay, so cash flow statement is not a big deal. I would say if you know the proper basics, the cash flow statement will be not a big deal. Okay, and the proper basics of the cash flow statement, the very proper basic is the property, plant and equipment. Okay, so adjustments of the property, plant and equipments have been discussed in the LKAS 16. When we are doing the LKA 16 statement of property, plant and equipment, we have discussed. So what will be the impact of revaluation reserves? Well, what will be the impact of cash flow statement? So what will be the impact of the depreciation, sales, and the purchase of the property, plant and equipment? All the stuffs have been discussed when we are doing the property, plant and equipment. Okay, so this opening and the closing accruals, those stuff also have been discussed when we are discussing the what we called the ledgers and the financial accounts of the sole proprietorships. Okay, so yes, simple as that. Please note down the answers for the A level paper. Okay, and workings also very much needed, and the marks have been allocated for the workings as well as the statement. 10 marks for the workings and 10 marks for the statement as well. Okay, altogether 20 marks for the cash flow statement. Okay, so yes, simple as that. So today we can conclude the cash flow statement. In the next class I'm hoping to do the accounting equation. I think not the accounting equation, sorry, accounting ratios. Okay, so in the next class we'll do the accounting ratio stuff. After that we can move to the management accounting, which means the material cost, the labor cost, and the overhead absorption rating, and those stuff will be discussed in the management accounting. Okay, so yes, in the next month, in the next class, we'll discuss the accounting ratios. Okay, the equation and the all stuff can be discussed within 2 hours. So simple as that. Okay, so I will give you some time. Please note the answers, the statements, and the workings. All things are very much important. Okay, so yes, and see you in the next session. Okay, thank you. Thanks for joining.